on embedded finance partnerships and WealthTechs, exploring new avenues for distribution and customer acquisition. I'd like to welcome our moderator for this session, Mr. Shashank Shekhar, Head of Consulting Digital Fifth, to kindly join us up on stage. And once again, ladies and gentlemen, to our delegates, I do request you to kindly take your seats. Settle down, please. Thank you so very much. I believe we have a panelist amongst us. If our panelists are right here, would you please do step forward towards the stage? In the meanwhile, once again, ladies and gentlemen, I know you're having a great time here at the Global Fintech Fest, and we'd like you to capture the most of the memories that you have here over the 3 days. And we have something special for you. You know you can easily scan the QR codes on the digital standees that we have outside, upload your selfies to receive every single photo that you click in your inbox. And this is a great way for each and every one of you to network pretty much what you've all been doing over the yesterday, today, and looking forward to doing tomorrow as well. We would also not want you to miss the product launch by NPCI in Jasmine 3 on that's happening today between 4:50 p.m. to 5:30 p.m. Once again, we have a product launch by NPCI in Jasmine 3 upstairs from 4:50 p.m. to 5:30 p.m. And we're honored to have none other than Mr. Nandan Nilekani, the non-executive chairman of Infosys, gracing us with his presence. Well, with that, ladies and gentlemen, we are now ready to commence with our panel discussion, and we're looking forward to getting started right away on embedded finance partnerships and WealthTechs, exploring new avenues for distribution and customer acquisition. I'd like to invite our moderator, Shashank Shekhar, Head of Consulting Digital Fifth, to please join us up on stage. Ladies and gentlemen, let's have a round of applause, please. Thank you so very much, sir, for joining us. Please do take the center seat. And may I invite all the delegates sitting right at the back. This hall is going to get very crowded in a short time from now. So for those of you at the back, if you want to step up in front and occupy some of the empty chairs that you see there, it'll be really beneficial for you as well. I'd now like to invite our panelists. I'd like to start with Arti Somani, SVP and Head Risk at MSME Banking, Unity Small Finance Bank. Thank you so very much for joining us, ma'am. I'd like to welcome Rahul Tripathy, co-founder of Fundfina. Round of applause, please. Thank you so very much, sir. I'd like to welcome Sankalp Mathur, co-founder CRD Niro. A round of applause, please. Let's welcome him up on stage. And I'd like to welcome Rajat Deshpande, co-founder and CEO at FinBox. A big round of applause. Thank you so very much, sir, for joining us. Well, with that, ladies and gentlemen, we're ready to commence with this panel, and I hand over to our moderator, Mr. Shashank. Please take over.
Thanks, guys. Thanks. Very good morning to everyone, right? So great. I think embedded finance is an amazing chapter in the digital finance that we are going to talk about it. Just imagine, I think most of you may be using money control app, right? And which is like for the market content that you're talking about. Now just imagine that you're on the money control platform where that you go and try to visit and to get to know about that what's happening in the market, and you're able to buy the fixed deposit there, right? Now you're not on any bank platform or a fintech platform. We are on a content platforms, and you're able to buy the fixed deposit or, say, for example, any loan kind of things. So that's kind of the world that we are getting into that, right? It doesn't matter that whether you're buying the FD or any wealth product from where, right? So that's where we'll start, and we're definitely going to have an amazing discussion. So with that context, I'll get started. Maybe we'll start with Rajat himself. So Rajat is building technology platforms which enable that plugging and plumbing of this embedded finance. Maybe Rajat, if you want to talk about that, how this entire the evolution of the embedded finance, and you have seen this very closely, right? How do you see in the last 1 year that the things has been shaping up?
Thank you so much for having me here. Embedded finance definitely is one of the most exciting new developments in the fintech space. The evolution has been, of course, it was in the early days stops and starts. There various sort of stakeholders in the market in this transaction are the anchors, the TSPs or the technology platforms, and then the end lenders or the financial services providers in this case. So in the early days, of course, nobody really understood what each stakeholder's exact role was, right? So everybody was trying to do everything, and not to great effect, because everybody was getting into each other's way, and overall the experience of the customer wasn't very optimal. But very, very soon, within about 7 months, it sort of fell into place. Now, a lot of, if I start at the bottom of the stack where the financial services providers are, a lot of them have started or have already built a good API platform to integrate into, the TSPs, etc. Then, there are sort of players like us who facilitate and build technology here. Of course, we have matured over time, figured out what products we like, don't like, and similarly, the anchors have also, where these embedded finance transactions actually happen, have figured out what the business model is, how will they acquire customers, how will they cross-sell, what kind of products work, what kind of products don't work, what kind of commission structure or business models they are building, what is sustainable, what is not. The data flows have become much better. There have been there is a deep understanding now on what kind of data is predictive of behavior from these anchor platforms. There's a lot of interesting regulation on the specified user side where players like us can pull in bureau data to facilitate some of these transactions at the top of the funnel. So a bunch of this has happened, and this means that we are in a very, very exciting phase of building, and scaling this business. What has also happened over time is that interest from very large platforms has developed. So you talked about money control. There are a bunch of these guys who have millions and millions of customers and who want to make the multi-product transition to monetize some of these customer bases, which is very exciting, in the ecosystem. So overall, I think everybody's understanding has improved. Business models have stabilized. A lot of operational, issues have been sorted out, and a lot of learning has diffused into the ecosystem to now start scaling, this business. So this very exciting times ahead.
No, thanks, Rajat, and I completely echo with you. So I'm not going in a sequential manner. I'll go more on the contextual manner, right? So I'll come back to Arti because now he has been more from the TSP perspective, right? From the players. But look at that. For any banking or financial product, you need a financial service provider, the manufacturers, and banks are the center to the whole of the process. So Arti, as a banker, that how do you see that entire the evolutions and how do you see that what kind of the values are getting created for all the ecosystems stakeholders, right? Be it on the banks or be it on the anchor or be it on the tech players that coming into the picture.
Thank you. Firstly, embedded finance, I think, has always been there. Bajaj was the actual, OG, I would say, of embedded finance in a physical world, wherein, a customer could go to a store, buy something, and then there was a Bajaj, RM who would, help you with with the lending facility. Now the dynamics have changed. It has become very digital in nature. There is e-commerce, then there is a customer, there is a banker, there is insurance provider, and there is so many people have got added to this whole value chain. So when from a customer perspective, the value that has got created is exceptional because the customer doesn't have to leave the app or, wherever he is, he's in his comfort zone, he's getting the product, he's getting the credit facility. For example, you're shopping on an e-commerce website, you could use BNPL or you could use any other EMI facility. And so for the customer, it has become seamless experience. He's on that website, moving on and enjoying a higher ticket size, lending for himself. For the seller, it has become a great proposition because the customer average ticket size will increase. If he has a lending opportunity, a credit opportunity, if he has, then it is a win-win for the seller. Now comes to the banker or any NBFCs. So for us, it has become a great proposition because we are getting the data for the customer from the e-commerce provider. We can run scorecard, we could give him a credit facility, we could check the bureau scores. So there is a lot that we could do with this customer's data and then come up with a credit facility for that customer. Or, going forward, maybe we could also give him insurance, like some insurance also could be provided. So there are so many facilities. So for each person in this value chain, it has become extremely, exponential. And there is so many avenues which have opened up. So there's a lot of value creation for the banker. There's a value creation for the customer, for the fintech, because they are providing the APIs. So everybody is, benefiting out of this value chain.
Thank you, Arti. Thanks. So Rahul, I come to you. So embedded finance, if you look at it, in the digital finance perspective, I think one of the segment which has been always been challenged to get any kind of the financial product, which is on the MSME, right? Be it from the bank side or any other segments you look at it, and be it on the lending product, be it on the wealth product, right? So you have been trying to solve that kind of the ecosystem problem for the MSME and creating a completely embedded finance kind of the marketplace for the B2B. How do you see that embedded finance is trying to solve that kind of problem of be the lending or any consumption of the financial product for this segment? Because always the statistics have been spoken that still that 10% or 15% MSME get then access to the direct lending. So how do you trying to solve this through the embedded finance, and how do you see embedded finance playing the role into that this segment?
Thank you. That's a great question, and thank you everyone for showing up for this embedded finance platform panel. Look, MSME, when you work with MSME, and specifically it's a very broad spectrum that we are talking about. It starts from the nano micro merchants, who are selling, or traders who are like mom and pop stores, kirana shops, pharmaceutical shops, and going up to the mid-level industries. So we started out with the nano and micro base, and credit became the hook for us because that is the burning topic for them. That's what they struggle with. That's what their go-to market is, basically either friends and families or the local money lender. And we said that the CAC, which is the most touching topic for a banker, for a lender, is very high. So we deployed this embedded platform at several anchors wherever these people were transacting. And thanks to a lot of effort like UPI, demonetization, which the government brought in, or the GST, a lot of their transaction base moved from offline to online. So looking at those data points that that Arti and Rajat was talking about, we were able to underwrite those risks and help those lenders understand how do we underwrite risks basis the transaction data that comes to our platform. But then over a period of time, we also realized that it is not just the credit product that these segment wants. They have been financially excluded because it is difficult to serve them. How do you sell a wealth product or a savings product? It's not that people in that particular segment do not need a savings product, or do not need a CASA, or do not need a wealth product. They all need it. It is just that it is unable, the participants or the manufacturer of the product are unable to sachetize it. And that's what platform like us are trying to solve. How do we sachetize it and deliver those services and products at the most cost-effective manner, which is beneficial not only for the manufacturers of the product, but also for a platform like us, and ultimate beneficiary definitely ends up being that MSME segment that we are talking about here.
Thanks, Rahul. So Sankalp, I'll just extend some of the point Rahul touched upon. And you were building that, again, in the embedded finance space, end-to-end kind of the process, right? From the customer acquisitions to the servicing and helping that lenders into that process. Now, Rahul spoke about the risk factor, right? And underwriting process. How do you try to make a balance of the risk and vis-a-vis the value prop that you are creating for the anchor as well as the lender. So probably more from the lender, how do you create a balance between the risk and the value propositions?
See, from our perspective, I think whenever you are actually going for any kind of a lending product, right, I think the most important thing to think about always, and which basically helps you in the long run, is to maintain a risk discipline, right? So risk is not something that, a large number of people assume that, you need to really maintain a balance between your growth and risk. It's not like that. The way it actually works is risk has to stay, okay? Risk, you are building, you cannot say that, I want greater amount of volume this month, so what I'm going to do is I'm going to drop my CIBIL score this month, okay? It's not going to happen. That's not the way a business is built. The way a business is built is you have to basically specify certain norms around where do you want to operate, what is your risk appetite, where do you want to be, what is your cost of fund, does the actual P&L make sense for you in the long term, right? So in theory, on paper, you first basically write what are the principles of this business, right? Now, once you have done that, once you have figured out what your risk appetite is, at that point, you actually go for risk measurement. And that is where embedded finance actually becomes important, especially in all of our context, in all the context of all the companies that we are here on the panel, is that the way it's slightly different from what a lot of other people do in the industry is that we are basically working with an anchor, right? And those anchors also have sufficient amount of information about the customers, right? And what that helps you over and above what a credit bureau score can give you and some of the alternative scores can give you is what kind of a behavior the customer is exhibiting, right? Risk is all about trying to reduce the information asymmetry, right? The greater is the reduction, the better risk measurement you can do. The better risk measurement you can do, the better risk underwriting you can do. You'll see greater approval, greater number of approvals, and you will see greater amount of throughput without causing disruptions in the customer journey, causing too much of the heartache for the customer. कि आप ये बताओ, आप अपने घर का photo दो, ये दो, वो दो, right? Without doing all of that, because you have been engaged with the anchor for a fair amount of time, what you will know is what kind of behavior this customer exhibits, right? And you would not go after those customers who you think have a very high risk of default, right? So that is the way we think risk is somewhat different in the embedded finance journeys as compared to rest of the world. So the first part of my answer was more a little bit generic, but the second part is more specific to embedded finance. I hope that.
No, super. I think that's given a very good insights, right? Especially from the data symmetry perspective that you are talking about. Now, Arti, coming to you, right? Typically, I've seen that context well in one of the work that we were doing. And the anchor was telling that, okay, the lenders on the back end, they had the segregations, right? So anchor will say that, okay, why did you rejected this customer application and why did you selected this kind of the customer? Because anchor sees that all his customers may be eligible, right? So how do you, as a banker, typically since most of the times when you are directly sourcing, you have the touch point, you know your customer. But when you're dealing with an anchor in the embedded finance process, how do you create that segregation of the customers, right?
See, one is we will always have our own risk appetite, what Sankalp rightly mentioned. So basis our risk appetite, we would actually set up a scoring mechanism for the customer. I'm just saying it in a very crude manner, but yeah, there is a scoring mechanism for every customer. And my way of looking, or, the bank's way of looking at a customer could be completely different than the way the partner is looking at it. We would be looking at different aspects. It could be the bureau score. It could be where the customer is residing. It could be so many other aspects. Customers banking, customers what is the credit input that is happening, how he is performing on his other loans. So there are n number of aspects that, as a bank, we would look at. So, I'll just tell you, how, for example, I'll just give a very simple example. When people partner with Amazons or the likes of it. Somebody who is a thin file customer, but buying a diaper on Amazon, okay, mind you. Now that's not so diaper is, as a product, is not a necessity, and it is not even a luxury, but it is somewhere in between, okay. I'm giving this example because, now as a lender, we could even monetize or, even use this as a data point for a thin file customer. So I see, there is a stability in that customer. He has dependents. So, this is a very innovative or a vague way of, analyzing a customer. But I would see stability in that customer, and we would score that customer accordingly. Okay? So, which may really not be fit for someone else, may be fit for us. Okay? So, for every lender, the assessment would be extremely different basis their risk appetite. That is all I would like to
I think amazing example, right? And it's look at the way the data, I think Sankalp also talked about, that the anchor brings that kind of the data because customer is there, customer is involved into the process, right? And that anchor brings that kind of the data, like the Amazon example that Arti spoke about, and that can give a very different perspective to the financial service provider to look at it, right? Not only at the single data. Now I'll just extend to the primarily more touching to the topic. So embedded finance has largely been seen as solving the lending issues, right? Be it on the MSMEs or be it into, you look at that, talk about financial inclusion side of it, BNPL kind of the products and all these things. But Rajat, how do you see that tech players like you guys and building a layer of the wealth products, maybe for any segment? I'm not going to very specific to the segments kind of things. So how do you see that kind of the layering evolving into the future, especially for the acquisition, distribution? And if you look at in the wealth, why I'm asking this question, still in the wealth penetration in India is quite low as compared to any other products, right? Be it, and both on the insurance and the MF or the stocks, right? It will be still hovering around 5 to 6% of penetration. How do you see that embedded finance player adding a layer of the wealth help into the increasing that distribution of the wealth product?
Super. Even before I come to this, I had some couple of points to add on
Absolutely.
like the
Please
risk
go ahead.
and operational aspects. So embedded finance is a B2B2C model. So think of like a lender working with like a very large strategic anchor, right? Now what happens is that the commercials of course get negotiated very hard. What doesn't really come out in the early days is the operational model. Which customer will get quicker disbursals, which customer segment will get, PD or, all of these other operational processes. And this expectation setting with the anchors is very, very important, apart from the risk piece. Risk and data, so what we tend to focus on is only the data aspect, but the risk also carries an operational process behind the scenes. Right, which we felt that the anchors don't understand, and then ultimately they don't build their expectation setting user interface well if they don't understand this partnership well. And what we've done to sort of mitigate this is, of course, educate both the anchors and the lenders on this, but then also try to create a green channel, which is the pristine sort of super quick dispersal channel for both the anchors and lenders, so that they are successful in, really treating their strategic anchors well, right? And then they can sort of over time, as they review their business, they can talk not in monoliths, but in more credit segments and operational process terms. And ultimately, this also then starts reflecting in their commercial negotiations. So if you think about it, from the start, it is a very, very what we call bhaji market type negotiation. It has no nuance in it. You're like, I want this commercial mere customer ko, you give me instant dispersal. This is what an anchor wants, right? Give loans to or whatever financial services product to everyone, give it to them instantly, and give me insane amount of commission. There is what the anchor will start with, and the lender is exactly at the opposite side, and they have to work together and come in between, and they have to add nuance to this conversation, right? And which is very, very important to understand, and for the ecosystem to also understand that this is not magic, right? It's not like it can't be an API to get money. There's no API to like make money, right? You have to do the work here. So this is like a little bit of color on risk and how operational processes have evolved over time. And I guess as this evolves and people can come together to build a more efficient business, it becomes much better for the entire ecosystem. So this is like a little bit of battle scars that we have seen over time, but it's interesting the place we are in. So this is about this. Another piece on WealthTech. WealthTech is very, very interesting. From our perspective, one is that these people have money, right? So there's a very, very good filter on the kind of people who are using or have WealthTech products, right? So you understand that they are not folks where you will need to build a very, very risky business. It's a sort of a mid-premium or mid-prime to prime class of folks, which is very, very interesting. Second is there are a lot, these guys are engaged. WealthTech if you have a mutual fund investment or you have share market sort of investments, etc., you will at least check them. Maybe, worst case, you will check them twice a year. You can imagine how many platforms get your attention even twice a year, right? Third is there are very, very sharply defined classes of folks. So there are traders, there are investors in stocks, there are investors in mutual funds, and then the segmentation in the WealthTech industry is very, very clear. Everybody understands what is a platinum customer, what is a gold customer, etc. Now you can build very, very sharply defined products with a very sort of good understanding of how much money the ecosystem of the WealthTech guys is going to make, which is not the case in other parts of the ecosystem. So this is super interesting, and I think it's still evolving. And another very interesting piece is secured digital products like LAS and LAMF, which are, of course, sort of in their early days of maturity, but they also seem to be super interesting products from our perspective. And one interesting piece is, especially, Rahul here will know, is LAMF can be like a cash management, product for the MSME segment. Today, it's looked at as a more consumer piece, but combined with cash management, it becomes a very powerful MSME working capital product, which is, I am very excited to see this sort of come about and all of these ecosystems merging into a cohesive, very nice product for MSMEs. I'm just waiting for it to happen, and hopefully we'll see this sort of come together fairly quickly.
No,
that's about it.
No, thanks, Rahul, and thanks, Rajat. So, Rahul, I'll just come to you, right? And MSME rightly bring that. That's I wanted to bring. So, when you talk about the investment, like everybody either looking at the retail side for the wealth generation capability, and the corporates have their treasury team to manage the fund and to generate the wealth, right? But nobody look at the wealth generation opportunity for the MSMEs. And since you are into the focus area with the embedded fund, how do you see that embedded finance going to help these MSMEs from the wealth perspective to have the wealth products buying capabilities and increase their wealth generation opportunities?
Look, MSMEs have had this requirement of, basically they thrive on liquidity. So the products that we are looking at and typically that we are trying to design for MSMEs, that it has to have a very strong component of giving them easy and quick access to liquidity. While they want to save them, and there are enough products out there. Yesterday, there was a panel on P2P. People were talking about 12% club. We have around 1.3 million merchants on our platform. There are people who are cash rich, but they are cash rich during certain parts of the month. where they can park that money around. They can put it in, people like you and I here on in the room have access to liquid Bs and different kind of liquidity product, which can work even overnight. But those kind of products have to be provided to MSMEs overall so that they can tap into those, liquidity requirements at a, click of a button. So what Rajat was pointing out to, sachetizing that product or, loan against mutual fund, loan against property, loan against shares, this will gain a lot of traction in time to come, provided there is enough, willingness from the side of manufacturer of products. And again, I go back to my previous point that I made in the last, question, was that there has to be equal participation from all sides, whether it is, the demand side, whether it is the supplier of products or platform like us, to facilitate that transactions to go through. Embedded platform at the end of the day are only facilitating those transactions in the most cost-effective manner. And that's the broad, basically baseline of this entire panel.
Okay, thanks. And Sankalpa, how do you see that anchors, when they come to partner with you, how they are looking into that, extending the wealth products to their segment of the customers? How do you see that market evolving?
See, I mean, the most anchors, I think, are more interested in monetization as opposed to anything else, right? Because they're all there to create some amount of money, generate revenue for their businesses. How you do it is up to you as a platform, right? They don't understand, generally speaking, right? They don't understand what you can actually sell to the customer. You can sell a personal loan, you can sell a mutual fund, you can sell an FD, you can sell an insurance product, you can sell whatever you want, right? It's on us, right, as platforms to figure out what the customer wants from us, right? The way it can be helped, like I said before, is understanding what kind of behavioral patterns customer is showing on the platform and tailoring those kind of products and directing those products to those consumers who want the certain kind of product, right? So if you are, let's say, for instance, you are on one of the job search portals and you have embedded your services over there, and the customer has, let's say, 15,000 rupees income, and he is living in a city like Mumbai or Bangalore. If you are trying to sell mutual fund to him, it's not going to make sense, right? But if you are trying to give him a personal loan, that will probably make more sense because that's something that he would probably need, right? If you actually try to give him something around upgrading his skills, some sort of an education kind of a loan, they will be interested, right? Similarly, if you're looking for somebody who is on a real estate platform looking for a villa which is 2.5 lakh rupees a month rental, right? Then you should actually target a mutual fund product, right? So depending on the context, what kind of product needs to be offered will change, right? And that's the most important thing and actually the most exciting piece in embedded finance, that you have the ability. So, I think FinTech 1.0 was when people actually went ahead, digitized the entire product and tried to get customers no matter how, right? The question now, like FinTech 2.0, is a little bit different from what it used to be previously. And how it is different is that that equation has changed, right? This generation of entrepreneurs have understood that, if you're trying to buy customers from the market, it's going to be expensive, right? And therefore, you don't have to drive engagement. Work with people who have already engaged the customers, right? Help them in monetizing their customers, and to those customer set, sell what actually they need, right? If you're able to do that successfully, you have a business that you can, look at, in terms of IPO acquisition, whatever you are looking for.
Just
Yeah, Rahul.
And what the customer needs definitely needs to be addressed. And many a times, from MSME perspective, they don't have the time to even realize that this is what they are, they want it, and they want to, they just don't know what is it that they actually need. So sometimes just presenting yourself at the right time, at the right moment, gives that aha ki, oh, I needed this.
Yeah.
And that's a big factor of adoption. So most of the times we have felt that MSMEs do not know. For example, one quick insight. A lot of our customers did not know that the loans that were coming through our platform are unsecured. And then we said that when we started this survey, I was like, sir, we don't take up the loan because sona dena padega, kuch aapko collateral dena padega. And then that's where we realized that they don't know that a product like unsecured loan exists for them. So sometimes the customer does not know what they want, what they need. So
No, even I'll just extend to the same point that customer doesn't know, and from your platforms, like customer may not know that, okay, based on the cash flow, okay, you are going to have a surplus of, like, say, for example, 30 days or, like, say, for example, 6 months of the cash available. Can you just invest into the product, like semi-liquid kind of product and in cashes, right? That can be done, right? So, so I think interesting discussion is going on. Maybe now I'll open a floor for any questions from the audience. Yeah, I will take forward what we were discussing. See, the problem is not much, maybe in the insurance and the lending, because they are more standardized product. Out of WealthTech, what I have seen, I might be wrong, all this WealthTech, robo-advisory are targeting the existing customer rather than untapping the new market.
Maybe the problem is the trust issue. Because when I want somebody to manage my money, I want him to know me, my family background. So how this robo-advisory, WealthTech, AI is going to address this trust issue when I'm managing somebody money? Because this problem again is not there in insurance and lending.
Maybe, okay, Rahul.
I mean, look, this was initial days when we were driving adoption, and this was the question we were trying to answer. How do we make sure that people, trust the platform? And that's where embedding goes a long way, because they have been transacting with the anchor for a very long period of time. And when you try to, channel a product through that anchor, that trust is already built. So they know that it is coming through a trusted anchor where I have been transacting for a very long time. So embedding helps in solving for that trust issue in a very long way. But of course, it's a long bridge to travel, and I think it will still take some time when it comes to wealth, because you're talking about creating asset for people.
Yeah, and yeah.
Like to add something here, so I think in the wealth, area, it may just not become 100% thing, where it is fully digitized. That 20% human touch would always be needed, because somebody is putting his money there. So they would need somebody whom they can speak to. So, but a huge amount of data analytics, what the robo-advisory can assist, that is the game changer. And I think that would act as something to pull the customer.
Thanks, Arti. Maybe a space for one question. Yeah.
Selling the lending products and risk profiling the customers, who takes the onus of collections of those disbursement, and how could embedded fintech play a role in the collection space?
Maybe yeah, Sankalp, and then maybe Arti, because you are giving the money. Yeah. So, yes.
Sure. So I mean, most of the fintech embedded play, or most of the fintech play, for what it's worth, there are both different kind of models that exist. In one model, there is the lender who actually underwrites the customer, as well as takes the ownership of the risk and collections and recovery. So that's one model, which is pure play lender based and lender driven. There is a second model on the extreme end, where it's usually the one which is now called FLDG model as well, right? Where the loan service provider actually takes the ownership of underwriting risk to a certain extent, and actually doing the collections and recovery to a certain extent. The policies are aligned between the lender and the loan service provider, and they work jointly on figuring out how to underwrite, how to qualify a customer, and how to collect from the customer and do the collections and recovery. And there could be, like, these are the two extreme ends of the ecosystem. All the different permutation combinations in between are also possible. Anything?
Thanks. So Arti, because you are the lender, right? And with the FLDG structure coming in tighter from the regulator, how do you exactly see the collection piece? Because you are giving the money, right?
So the whole fintech that you're partnering with, so they are playing a huge role on that still. in spite of the fact that the FLDG guideline, the lower FLDG, but there's a huge reliance on the fintech, first and foremost. But of course, we are into, a business of risk, and we always cover our risk. So we will always have a, back-to-back marking at our end also. So for any reason, if the fintech is unable to help on the recoveries, there is a bank team which will be there to, assist on that. And over and above that, just to add to what Sankalp said, so there are two models. There's one more model wherein, we also take support of the seller, it could be a manufacturer. So they are also assisting, in this whole recovery mechanism. I would give you an example. For example, the commercial vehicle or the commercial equipment kind of, business, wherein, if the manufacturers also help in the recovery to the extent that, they could stop the servicing, they could stop the machines itself. They come with a GPS tracker. They come with, trackers wherein they can stop the machines itself. So there is a lot of advancement which has happened, and, so many new models that have, come up.
No, in fact, I'll just extend this point that Arti was talking. So like one of the embedded finance, the player that we were talking about, and they were into, like, say, for example, farmers and pouring the milk, and he gets the money from the dairy and the collection. So like lender will do that, okay, rather than money go to the customer and then collect it, why don't I collect it from the source where the money is coming, right? So collection is also getting embedded in the whole journey itself. So I think MC is giving an indication that time is up. But I think we are getting into the space. It's an old cliche now of the 3 years that we are hearing that every company will become a fintech company, right? Every company will be providing the financial services. So I think we are heading towards that. And thanks, my panelists, for a wonderful discussion. I know it's a very bite, but thanks for taking time. Thanks. Thank you very much.
Thank you so very much, ma'am, gentlemen. Ladies and gentlemen, an amazing panel discussion. Once again, so very sorry for being a spoke in the wheel and, halting the momentum that we had gathered here. But once again, ladies and gentlemen, for those of you who would like to interact with the panelists, I'm sure they would be very happy to meet you and discuss furthermore. Right now, we would like to present all our esteemed panelists mementos on behalf of Perfios. So let's have a round of applause as these are being presented. Ladies and gentlemen, to the wonderful insights, thoughts, opinions, and the information that's been shared here today. Thank you so very much, each and every one of you.